Hello traders, Gary Wagner here. It is approximately 10:30 in Honolulu, 4:30 in New York. It is Thursday, the 27th day of September, and this is the daily report for gold and silver. And what a day we are seeing in the market. As you can see, market up substantially, 1777.87. It's been ranging between 78 and 80 recently. Kitco shows the bid at 1778.40 and 1779.40 bid-ask spread up 25.10. Incredible move in gold today. Silver, as you can see, is also moving higher. That's up over 2% today, up 89 cents. You can see 34.72 and 5. So we've got a really strong market. Of course, yesterday we did get stopped out, took tremendous profits in our gold position. We're still long silver at 29.10. And I did put out a buy signal, buy trigger this morning to re-enter the market. The bottom line is by getting stopped out, we kind of missed about a $20 or $25 of this move. However, if the market continues to rage higher, we certainly need to be positioned in the market. And stops are there, of course, to help us in case of a meltdown. At the same time, they can do what they did, meaning they can stop us out and then move back up. The point is that the fundamentals right now are absolutely so strong that we're dealing with a market that is quite honestly a once-in-a-lifetime adventure. First chart we'll go back to is this weekly chart, straight candlestick format, and here's what I'm finding interesting. You know, as this week forms, this candle right in here has been changing, no doubt. And when we looked at it yesterday, it was red. And that was that three-river evening star formation. Now, I think, in fact, I'm sure that I mentioned the fact that not only should it be red, but it should be a long candle, and we would see what happens as the market forms. It would look something like this. In fact, it does not. And what we are seeing is a hammer in the market. It's a hammer hangman, and really it's significant in that when the marketplace itself is brought down, in other words, you can see it opens at the bottom of the rectangle. Current price is the top of the rectangle, but at some point they brought that market down and brought it down near an area of 1735 right in there. You can see that right here. But once it got to that point, buyers came into the market, pushed the market back up off of those lows, and actually what we're seeing is it's up near the highs of the day. You have some very strong news coming out of the European Union. That's been building for a while. Spain right now, Ireland right now, Italy right now are in tremendous financial turmoil. Greece, add Greece to the mix. On top of that, we had a statement by Ben Bernanke that he would act to work with the European crisis. So on top of QE3, he might have to implement something else. Then you've got China, add that to the mix. You've got a potent mixture, and that mixture could lead to the perfect storm. Perfect storm meaning that we get parabolic move to the upside or a pretty strong move to the upside. And that's why I felt it was very important that we re-enter the market. For those of you who have just joined the service, this was a point for you to enter the market and to initiate a position. Now, this really shows us what is going on in the market on a technical basis. Henkin chart, 420 minutes, so it's one of the shorter term charts that I use. We looked at the support line that I felt was pretty critical, just above 1750, and you can see this is where we got stopped out as it came and dipped below there. You can also see that since that point, there's absolutely no doubt, but the market is held, and look at the size of these Henkin candles on a short-term basis. They are lacking the tail, the lower wick, excellent. They're nice body size, excellent. They're coming after the market really being in a fairly tight and consolidating range. In other words, we talked about the fact that the market could be top heavy, forming a rounded top, and then could move up, or this would be the beginning of a correction. Each day I kind of changed a little bit on which I felt was more likely, but the technical evidence right now is abundantly clear to me that this market wants to move higher. Well, where are we going to find some resistance? Well, we've got these highs. I think it's around 1791 right in here. Let me see if I can draw that straight. And you can see that top. It needs to take that out before it starts running towards 1800. In fact, if we see that, we'll see how the market reacts at that point. But there's no doubt, there is bullish sentiment in the market. The central banks are buying gold. As I said, this could be leading to the perfect storm. Traders, we are looking at a daily chart straight candlestick format. Once again, we're looking at the fact that we saw this MACD cross, but now you see it starting to actually go in and reach for those highs again. This market is absolutely overbought, but on a technical basis with the fundamentals that are in play, it could stay overbought as it reaches new high prices. We'll just have to see. And traders, now for silver. Luckily, by roughly 4 ticks, I think the low was 33.20, 34. Our stops were, or 24, excuse me. Our stops were 33.20 and below. We safely avoided getting stopped out. We're in at $29 an ounce. My God, it's almost at 35. That's a $6 gain almost on this one trade. It's working out beautifully for us. We obviously have some strong resistance still at 35. It does need to take that out. And you can see that clearly as we look at some of the tops on this chart. Again, 420 minutes, so it is short term, and it is also in straight candlestick format. Let's go ahead and convert this to our Henkin, and on the system that I use, it is simply used as an indicator, and then you'll see a little bit of a difference. And what you'll see is now that we're in this Henkin format, look at the size of these candles in here. Look at this bottom activity. And as I said, we should once again have clear sailing till $35. That's roughly under 50 cents from here. But this is where we need to take out that particular area. And then I'll talk to you about the next areas I believe that the market could go to, because there is probably going to be some sort of resistance at about 37, but between 35 and say 36 and change, it's really clear sailing once, I should say, if and when the market trades above $35 per ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.